As crypto heads into a pretty brutal winter bear market, we can reflect back on a year that set crypto apart as the worst investment. There are many reasons why. The last one will be the most important. Bitcoin is down 65% year to date. If you invested $100 into Bitcoin a year ago, you'd have $35 today. The challenge with losing 65% of your money is that you will need to earn a 286% return moving forward in order to break even. Anyone who's owned Bitcoin from the start knows it's been an incredibly great investment, but a majority of crypto investors have relied on timing in order to make money. As an example, someone who bought Bitcoin on December 15, 2017 and held until now would be down 16% after more than 5 years of holding. It was only about 13 months ago when many people believed Bitcoin would be headed to $100,000 a coin. The most knowledgeable educators in the space are predicting $100,000 Bitcoin in Q1 2022 or sooner. Kate Waltman, a New York-based certified public accountant who specializes in crypto, told us back in November 2021. If you followed crypto news, many experts were claiming Bitcoin was on its way to 100,000. My favorite career on social media is a crypto expert. They're entirely at the whims of a market far greater than their opinions or influence. If technical analysis was the answer, everyone playing the game would have been able to time the market. Being a crypto expert is a thing, but claiming to have any idea where the price of Bitcoin will be in the near future is a guessing game. Do not listen to anyone claiming to know the price. They are all as clueless as me and you. Bitcoin price prediction for 2030, from $150,000 to $12.5 million. Headlines like this give me serious FOMO. Be right back. I'm selling my real estate to buy Bitcoin. MicroStrategy is down 75% year to date. The company's founder, Michael Saylor, is one of the biggest proponents of Bitcoin on social media. I get the sense that he buys Bitcoin before buying food for his family. This channel focuses mostly on financial investments, but we shouldn't ignore investing in our health. If you're a busy guy like me and want to stay on track with your nutritional goals while also saving time, then look no further than today's sponsor, Factor. Factor delivers fresh, never frozen, dietitian-approved meals right to your doorstep so you can focus on your work and achieve your wellness goals without sacrificing time and convenience. They have a team of gourmet chefs that only use ingredients with integrity so you can feel your best all day long. I personally have found Factor to be a game changer in my wellness journey. It cuts down on grocery trips and cooking, saving me so much time to focus my energy on what I actually care about. Factor meals arrive pre-prepared and ready to eat in 2 minutes, which is perfect for busy lifestyles. And with the option to easily adjust my order size or skip a week if I have a special event, Factor is incredibly flexible. With 34 healthy and delicious options, there's always something new to look forward to. No matter what your lifestyle, Factor has you covered with keto, calorie smart, vegan and veggie, and protein plus meals on the menu each week. So head to factor75.com or click the link below and use code Spencer60 to get 60% off your first Factor box. Thanks so much, Factor. Let's get back to the video. MicroStrategy reportedly loses $1.8 billion as crypto prices plummet. His strategy may pay off long term, but we're talking about 2022 in a vacuum, and his decision to go all in on Bitcoin cost him greatly. Hindsight is always 20/20, of course, but it is funny to think that if he would have sat on cash for a full year and then buy, he'd have 3 times as much Bitcoin today as he does. Ethereum is down 68% for the year. Bitcoin and Ethereum have been seen as the safest plays in the crypto space, and both being down so badly has indicated that this asset class is still way too volatile for most investors. This is CoinMarketCap's chart filtered by the coin's performance year to date, and you can see just how brutal it's been for crypto. Picking a random subset lower on the list indicates the entire crypto market was beat up really badly. The Sandbox coin is down 93% in the last year. Just over a year ago, Sandbox closed a $93 million Series B round of funding. At the time, the coin had a market cap of $2.46 billion. There are legitimate companies that are generating $500 million a year in revenue from a business with a great product that are worth less than $2.5 billion. I think it's safe to say the crypto market and the metaverse were a little bit of a bubble. Shiba Inu is down a solid 76% since the start of 2022. I have to admit that I do enjoy seeing Dogecoin and Shiba Inu down bad after their meteoric rise in 2021. Seeing terrible investors who are gambling on a crypto altcoin become millionaires overnight was tough to stomach. Axie Infinity is down 94% since the beginning of 2022. I made a video titled The Play to Earn NFT Scandal discussing the problems Axie Infinity was having and warned everyone to get out while they could. This was a company that raised $150 million at a $3 billion valuation. There are smart investors who bought a silly NFT project at a $3 billion valuation. VCs take big swings, so I get it, but I think this period of crypto and NFTs is going to be seen as a massive bubble that I thought was obvious to see. Hex is down over 92% in the past year. I released a video a year ago poking fun at the guy who pitched Dave Portnoy the opportunity of joining the Hex community to get rich on one of his pizza review videos. Surprise! A useless digital coin lost its entire value since I released the video. It was very interesting reading the comments on that video and seeing so many people telling me how much of an idiot I was. You can call me whatever you want, but this chart tells me I'm not an idiot. If I'm going to lose 94% of my investment, I better be getting laid or receiving a non-monetary side benefit. As far as I can tell, Hex just provides an echo chamber on Twitter to make you feel like you'll be rich in 65 years. The fall of Terra, a $60 billion crypto ecosystem, to one of the biggest failures in crypto. The Luna price fell 96% in the past 24 hours alone, pushing it to less than 10 cents. That's down from about $60 earlier this week and a record $120 in mid-April. In what was a sign of chaos to come, one single dude caused pandemonium in the crypto markets when Do Kwon's Terra Luna crashed to nothing. And what has been unpacked in plenty of other videos on YouTube that will do a better job than I can explaining what happened, this triggered a butterfly effect that would topple future giants that will be discussed in a minute. Three Arrows Capital was next. The crypto hedge fund eventually collapsed after taking on major directional trades and borrowing from over 20 institutions, and the founders defaulted on its payments. On July 6, prominent cryptocurrency investment firm Voyager Digital filed for bankruptcy after crypto hedge fund 3AC defaulted on a $650 million loan. Celsius was next. Celsius had total liabilities of $6.6 billion and assets of $3.8 billion, resulting in a $1.2 billion hole in the company's balance sheet due to the court ruling. Then the monster happened with FTX collapsing overnight. Billions of dollars were lost because of fraud. BlockFi was the final nail in the coffin to a disastrous year in the crypto market. The massive risk in touching anything crypto was always inherent, and a major reason why I've never touched anything crypto, never promoted anything related to crypto, and made videos recommending people to focus on investing in real estate as opposed to Tom Cruise Inu. Crypto bros offloading G-Wagons, luxury cars amid FTX crash. In a funny New York Post article, there's belief that a huge surge in Mercedes G-Wagons and McLaren 570S exotics for sale are due to crypto bros losing their shirts in the markets. It's probably for the better because driving to your job at McDonald's in an exotic might make fitting in with your coworkers a little challenging.
So actually what it is something called Miami Coin, and it's fascinating.
Miami's Mayor Francis Suarez made a push for his city becoming a central hub for crypto. One of his ideas was to have a coin for the city to generate magic profits by charging a transaction fee of 30% on each transaction. Miami's mayor backed Miami Coin Crypto, then its price dropped 95%. The coin's chart is similar to all other altcoins in the past year in that it appears to have found its price at the bottom of the chart. The trading volume for the past 24 hours is only $6,442. If one person with a 5-figure amount of Miami Coin were to sell their coins, the market would tank even worse. I even found a day recently where the total volume was only $823. I understand these altcoins are attempting to have utility outside of line goes up and people make money, but everyone loses money by investing, the utility doesn't seem valuable, and the trading volume is so low that one person with a decent portfolio could tank the entire market for the coin if they want to sell. Consider me skeptical. As a symbol for how ridiculous the crypto world has become, this story summarizes how small projects would do anything to see their crypto coin go up in value to make a quick buck. A 12,000-pound metal sculpture of Elon Musk's head on a goat body riding a rocket parked outside Tesla HQ failed to elicit a response from the billionaire. Is there anything more representative of the Ponzi scheme culture of altcoins than an Elon Musk statue used as a marketing tool to get people to buy your useless token? One of the major benefits to crypto was the idea of decentralization, where the system doesn't have a single point of failure. Ironically enough, with the collapse of many of the tokens and exchanges seen in 2022, crypto today feels more centralized than banks in some respects. According to Pew Research Center, 42% of young men aged between 18 and 29 have invested in cryptocurrencies. 33% of men aged 30 to 49 have invested. I shared my concerns publicly for the last 2 years about new investors, who are generally young, getting their first experience as an investor in an incredibly risky asset class. While plenty made money for a short period of time, I think it's safe to assume that a majority have lost a significant amount of money since. And those investing in crypto when it was peaking in Q4 2021 lost most of their bankroll. While real estate is likely to take a little hit in 2023, it was the clear winner for the year 2022. I always think the best way to invest is putting everything into a skill, a business, a side hustle, or whatever you can to increase your income. The reason why I think investing in crypto was the worst investment of 2022 is because you don't learn a skill by putting your money into a coin. I've lost a lot of money in real estate, but they were learning experiences that I'll carry with me the rest of my life that will lead to making money long term. With crypto, if you lose money gambling on the next token that you saw being promoted on social media, you're out your money, you're out your time, and you didn't gain a skill. With that said, I don't want you to consider this video to be anti-crypto. So I'm excited to see what projects make it out of this crypto winter and possibly change our entire financial ecosystem. Even though this video is highlighting how bad the crypto market performed as an asset class in 2022, it's pretty clear that now is a significantly better time to invest than November 2021 when it felt like a bubble. Thanks for watching.